Hey everyone, how's it going? It's Thomas back at you with another video. And today we have some big Robinhood news. It just came out that Robinhood has filed their S1, and so we're getting information about their upcoming IPO. This has long been anticipated, and we don't have exact details yet. We don't have a lot of details. We don't have a price. We don't have a date yet, but we got details about the company itself, what it is that maybe we can expect. It's kind of hard to say as this is all very recent, like hours ago released. But essentially, what we're looking at is the S1 is going to be the big thing here. And I'm going to go over that a bit. I did want to point out some articles here. So the first one from Fox Business kind of goes briefly over the S1, saying that they have $81 billion in assets, 17.7 million monthly active users. 50% of them are first-time investors, which is not a surprise to me, as they've been able to sell themselves as the starting investment app just unbelievably well. Now, I think their biggest competitor is maybe Webull, and I've never really, I don't know a lot of people who trade with Webull. Like, it's no hate against it. It's a good app. There's nothing wrong with it, but nonetheless, they've sold themselves well on that platform. And despite everything that's happened with this company, somehow they've managed to keep coming back and keep rebounding with zero impact on the company performance per se. And why I say per se is what stood out to me and what's been really big is there have been a lot of companies filing IPOs this year, but this is one of the first, not one of the first, but this company, Robinhood, is showing positive returns. We've seen quite a few companies with negative returns for various reasons, like we went on like Duolingo yesterday, showing negative returns. But Robinhood is not showing those. Robinhood has shown positive returns consecutively over the past few years. Now, with the one exception being from this year, where they lost a substantial amount. And I want to see if I can maybe find it. It was, oh, I can't find it on the article, but we'll find it in the S1. But it was upwards of $1 billion, I believe, or maybe in the millions. I don't want to exaggerate here, but essentially that was because of the GameStop situation. So looking through this article though, so they've filed for their IPO, and it says that Disclosure became profitable last year only to have its losses skyrocket in the first quarter in one of the most high-profile upcoming listings of the year. And um, it's listed the size of the offering as 100 million, a placeholder that will change when it sets its terms for shares. It is said in generated net income of 7.45 million on net revenue of 959 million in 2020, compared with a loss of 107 million on 278 million on the previous year, according to the filing. And so it's been doing just exceptionally well within this last year. And coming up their IPO, this is just going to be really big for their underwriters. And the one thing I wanted to point out was the people who are investing. So Robinhood said in June that new directors would be joining its board, including John Rubinstein, who helped create the iPod, and a director at Amazon Inc., Robert Zoellick, former president of the World Bank, and PricewaterhouseCoopers partner Paula Loop. So they've got some really big names with pretty deep pockets coming in. And just to point out some of their underwriters, we've got JP Morgan, Goldman Sachs, Morgan Stanley, and then also Wells Fargo. So big names just backing up this company. And it's just going to be incredible to see what happens here, because we all know their name was just severely tarnished with everything that happened. And that was only Robinhood's fault. That was completely them to blame with what happened, without a shadow of a doubt. And so, we'll have to see how this affects them. I'm thinking It's probably not going to. The fact of the matter is that, there were a lot of people upset. There was a lot of people that left the app, and there was a lot of people that jumped ship when all this happened. But not enough that the app failed, not enough that it stopped, operating. It was enough that it cost them, but the amount of people that are still investing has been increasing just throughout the past couple of months. And they're doing it on Robinhood. And like I said before, they had that other previous implement where they said that you will not be allowed to sell your IPO shares 30 days after purchasing. And so until 30 days after purchasing. And so there's restriction after restriction, but it doesn't seem like it's too much of an impact on most people. But I guess we'll have to see what happens. It's really hard to say because, as I said before, we don't have all the information yet. And I'm going to just briefly go through the S1, just kind of see what it is that maybe we can be looking at. And as always, I'll link all of these down below for you guys to look at. This is a close to 300-page document. And so, I mean, obviously, I don't read all 300 pages. I try to find the things that I think are most important. That's their balance sheets, underwriters, and investors. That's who I want to know. And then also the amount of Class A and Class B stock that gets issued. Those are important to me. That's just what I want to see. But obviously, there's a lot to be seen in this. And so, obviously, always read through your documents. Always. That's my piece of financial advice for you guys today. Legal advice, since I can't legally give that to you, but nonetheless. Okay, so the underwriters, as I said before, you got Goldman Sachs, JP Morgan, Barclays, Citi, Wells Fargo, JMP, and the list goes on. So they've got a lot of backing. Now, we don't know what kind of shares they can expect. We don't know how much they're going to issue to them. We don't know if they're going to issue more after they do in order to cover up the costs, because it does seem like they have costs they're going to want to cover up here in the long run. It's going to be a bit pricey. As we said before, Robinhood has not been faring too well as far as the price game goes. It's been a rough first quarter for them, to say the most. And so, we don't really know. These investors right here, these are their investors as of right now. It's DST Global, New Enterprise Associates, and Rivet Capital. And so these guys holding quite a substantial amount, with DST taking the lead at 135 million shares, $135 million worth, not 35 million shares. So quite a substantial amount. And going up here, as I said before, we don't have numbers yet, so there's not a lot to be shown, as there's nothing listed as far as like percentage wise and the number of shares. Their CEO doesn't even have shares listed. And obviously that's probably going to change once we get farther down the road, which is, I think it's kind of interesting. I think it's kind of interesting that DST holds like a lot of shares right now, but not a lot of other members of the company itself. But, we will have to see. But with that being said, I want to scroll down to like the balance sheets and to those sort of things, and then also, kind of see where they lie in financials. And this might take me just a minute, just because of how long it is. Okay, so this is their consolidated balance sheet, and so 2019, 2020, and so what we're looking at here is total assets from 2020 December 31st, 10,988,000, and they've got positive numbers for that year. And then 2019 they had a loss, 106,000, but in 2020 they turned a positive. And then as I said before, this year with their first quarter, just the numbers were absolutely horrific with how much it cost them. And it's somewhere in this document, and I'm not sure if I'll be able to find it just because of how extensive it is. But I believe it was a percentage of their costs, and this quarter it was like 173% was what they were experiencing from the costs of the company itself because of what they had to pay out, what they had to um, fund because of everything that happened. And so it was just a really bad first quarter for Robinhood overall. And so, it'll be it's yet to be seen what could maybe be expected as far as the next quarter goes. I think that'll be, more telling of where the company is at right now. And maybe not even that, maybe the following one after. It's hard to say because the following quarter will be seeing somewhat of a rebound from this quarter, which was obviously terrible for them. So it might not predict accurate numbers, but then the following quarter after that will have influence of IPO numbers. So it's going to probably be a solid minute before we get like a steady balance sheet from Robinhood. I suppose we could look back at previous ones where they were showing negative revenues, but it's kind of hard to say. And so here we go. The 3 months ended. So condensed consolidated statement of cash flows. This is an unaudited. So the net cash for 2020 is negative 52,000. This year, 2021, negative 1,444,000. They've lost $1 million in just the past couple months alone. That's just insane. And so, I have to see what's going to change there because, as I said before, their big thing was they were one of the few ones coming in with a positive flow. And obviously that changed this year. And so, could it change in the next couple of months? I think so. I think things will get better for them, but it's really hard to say. And, like I said before, there's a lot in this document that we could go over and really look at. And obviously, I wish there was more to show you guys in this exact minute, as far as just like who is having shares of what percentage is going where, but we just don't have it yet. And so we'll have to see exactly what's going to happen there. It could be a good turnabout. It could be bad. And, I understand this is very speculative right now. We're not getting exactly what we want out of this info, as it's just not as compiled as we wish. And it's obviously very new. And that's just part of it with new data, is you got to dig through it and really find what you're looking for. But that's what I wanted to point it out, was they've got a lot of strong backing to what it is that is going on in the company right now. And so I think that's a promising aspect. And, it's Robinhood. They're just not going to let themselves fail. And so if you ask me, they're going to pull something else again. Maybe like right after their IPO, just to make them look a little bit better on paper and make themselves look better as a company. But they have a long ways to go, in my opinion. There's a lot wrong with the company, with how they're practicing, and there's a lot wrong with what is going on in the company as a whole. So we'll have to see. We'll have hopefully more information very soon. And once we get the prices, I'll be making another video on that, or at least I'll be attempting to. At least that way we can see like what prices are, maybe see if they're like a fair asking price at least, and then see what percentage of what is going where, because that's going to matter too. But until then, we're just going to have to work with what we got. So that's going to conclude this video. Make sure to like, share, comment, and subscribe. Thanks so much for all the new support. I really appreciate it, guys. Make sure to hit the bell icon so you always hear about future videos, and I will see you all in the next video.